It took me 5 years to come up with these 5 rules about trading psychology, but if you give me next 10 minutes of your time and actually listen to what I say here, I will save you years and years of struggle that you will face in trading. Understanding and incorporating these psychology hacks got me from being break-even phase in my trading to the point where I was making consistent profits without efforts. If you've already have strategy which is statistically have an edge over the markets, the only thing that is standing between you and the success is your mindset. But most of the people get it wrong when it comes to trading psychology. They assume that they have to somehow train their willpower to better control themselves, but this is not how it actually done. To be a disciplined trader, you have to put yourself into the environment that makes you disciplined. You have to incorporate some trading rules that will help you to be disciplined. And this is exactly what we are going to cover in this episode. Hello folks, welcome back to OP Investing. My name is Islam. This is the last episode of the 4-part mini-series where I will take you from the exact blueprint that will help you to master a mechanical edge over the markets, to help you scale your trading to 6 or even 7 figures in the next 30 days without guessing your trades or being glued to the charts. If you haven't watched the first 3 videos, I would highly suggest you to watch them first to get a full picture of what we're talking about here. Without wasting more time, let's get started. There are 4 stages of expertise in any field you choose. First, you're incompetent and you're unconscious about your incompetence. Then, you realize your incompetence. This is when you start consuming tons of educational content, learning every strategy you can find. This stage is called conscious incompetence. Over 50% of the people are going to give up on trading at this point. After years of practice, you finally find a strategy that works for you. You start having some wins and losses, nothing massive yet. This stage is called conscious competence. Most traders spend years here. To move to the next level, they need to work on their mindset. And the next level is unconscious competence, the stage where trading feels so natural that it becomes the part of your personality. At this point, you have an abundance mindset. Your psychology is tuned in and you make in a month more than you have lost in all of the years combined. To reach the highest level of competence, you must master both psychology and your approach to the market. But here's the most traders get it wrong. You think mastering psychology means training on your mind, becoming more disciplined through mindfulness, meditation, journaling, etc. Sounds good, right? But this is the biggest scam in trading today. There's a reason you keep blowing up accounts. There's a reason why you take impulsive trades. There's a reason why you overtrade. Meditation, journaling, they only treat the symptoms, not the root causes. So today we're doing things differently. We are addressing the real root causes. Let's start with the risk management. The number 1 goal of any trader is to preserve the capital. Only after that we should think about growing it. But I won't waste your time telling you that the risk management is no more than 1% per trade. You already all of that stuff better than me. What I want to tell you is something that you have never paid attention to, something that makes you over leverage, take on unnecessary risk and blow your accounts. Most traders out there trade multiple pairs at the same time. They think that this gives them diversification. But here's the problem. All major forex pairs are traded against one common currency. Can you guess which one? Exactly, that's a US dollar. Go to the Google and type forex pair correlation. You will see that most pairs traded against the dollar are positively correlated. That means if Euro USD goes up, GBP USD is also likely to go up too. This also applies to the future markets. Major indices like SPY, NQ, and Dow Jones, they're all positively correlated. Just open the charts, you will see how their price action almost mirrors each other. So what's the issue here? When you trade multiple pairs at once, even if you follow the risk management, you're exposing yourself to the higher risk. If you're wrong on one trade, you're not just losing one trade. You're likely losing multiple trades at the same time, increasing your drawdown and taking a serious hit on your psychology. So what's the solution here? Set yourself a daily risk limit. Tell yourself, I will not risk more than 1% per day. That 1% risk can be divided between multiple pairs, but your total exposure stays controlled. This simple shift will protect your account and let you trade with way less stress. So let's move to the rule number 2. There's a common mistake among the traders that leads to a very low win rate. But not knowing this rule doesn't just result in a low win rate, it has severe consequences. Traders who ignore this end up dealing with constant anxiety and fear of missing out. But don't worry, in this episode we're building up your perfect mindset step by step, and this rule is one of the most important ones. First, you need to understand that aiming for a high win rate comes with a cost. I remember when I first started trading smart money concepts, back then social media was filled with the traders flexing with 20-30 hour profit trades, and I had the same goal in my head: I need to win big. But after trying to catch the perfect, most refined order block over and over again, I realized something. I would lose at least 20 times before catching that one 20-hour trade. That's when I discovered a key principle. There's the negative correlation between win rate and risk-to-reward ratio. In simple terms, the higher the reward per risk you aim for, the lower your win rate will be. And the vice versa, the higher your win rate, the lower your risk-to-reward ratio is going to be. And the vice versa, less you aim, the higher your win rate is going to be. After years of backtesting and forward testing, I found that the best risk-to-reward ratio is something between 3 to 5R, and the optimal win rate is about 50 to 60%. This gives you a decent win rate while still allowing you to win reasonably big trades. And guess what? This dramatically improves your psychology. You won't be constantly doubting yourself or your strategy because of an extreme low win rate. You'll stop chasing life-changing trades, and the fear of missing out will start to fade. Here's one extra tip for handling the FOMO. Whenever I feel a FOMO creeping in, I ask myself one simple question. This one question has completely changed my trading psychology. Since I started using it, I've stopped taking impulsive trades, I don't regret missed opportunities, and I can patiently wait for the next trade. This question is this the last trade I will ever take in my life? This instantly puts things into perspective. No matter how good or bad a trade is, it will never be the last one. There will be always another trade and another and another. Once you truly internalize this, FOMO disappears. You realize that trading isn't about one single trade. It's about consistently executing your strategy. So if you miss a trade, it's not the end of the world. Now let's move to the rule number 3. What if I told you that you're overtrading not because you're greedy or trying to make more money? The real reason is something that you have never thought about. Once you understand this and apply it to your trading plan, you will never ever overtrade again. Just mark my words. Most traders set a daily loss limit for themselves. They tell themselves, if I take more than 2 losing trades, I will stop trading for the day. But here's the problem. They have no idea of how many trades they should actually take. That's why they keep overtrading, hitting deep drawdowns, and giving back all of their profits if they make any, even when they have a winning day. After years of testing, I've developed a rule of thumb for exactly how many trades you should take. I've broken down into 3 categories. For scalpers, you should take maximum 1 to 2 trades per one session. Whether you're trading Asia, London, or New York, just 1 to 2 trades. For the day traders, maximum 1 to 2 trades per day. For the swing traders, maximum 1 to 2 trades per week. You have to understand, just like in life, the number of opportunities that you are going to take in trading are limited within a specific time frame. So all of that good, But here's the key. This only works if you trade a fully mechanical, rule-based strategy. Think about the OP investing methods. It's a day trading strategy, and most days the price will follow one of the four main scenarios we have. On rare occasions, like two scenarios might play out in one day, but that's uncommon. Logically, you cannot have the breakout trade or manipulation trade at the same time. The price will either break out of the Asian range or it will just manipulate. There is no two things at the same time. That's why you need to know your strategy and understand that you will only get 1 to 2 high quality setups per specific time based on the type of the trader you are. When you truly apply this, you will never ever overtrade again. I promise you. Rule number 4. Why do you take trades that you regret? Did you ever take a trade only to look back and wonder, why the hell did I even take that? It wasn't perfect, it didn't follow your plan, yet somehow you still pulled the trigger. Why does this happen? Why do traders take compulsive trades that they regret later? It all comes down to something called analysis paralysis. On average, people make from 30 to 40,000 decisions per day. Most happen on autopilot, but when your brain reaches decision fatigue, usually after taking 50 to 100 conscious decisions, it starts shutting down. Instead of thinking logically, you start making impulsive choices. That's what happens when you take bad trades. Your brain is tired of making decisions, so it just takes whatever that feels right in the moment. Does it make sense so far? But here's the good thing. You can eliminate decision-making fatigue from your trading. How? By eliminating the decision-making process altogether. So first, you have to trade a fully mechanical, rule-based strategy. We have covered that in the first 3 videos. Second, you have to offload your brain. Write down your trading plan on paper and follow it it's a checklist. When you remove decision-making from your trading process, you stop making impulsive trades. It is that simple. Rule number 5. We're gonna talk about the number 1 bottleneck holding you back. This is where most traders break down, not because they don't have a good system, not because they lack a profitable strategy, but because they don't stick to one strategy for long enough for the edge to play out. So here's the truth, folks. Trading is seasonal. 3 months of the year, your strategy will outperform. You will crush it. 3 months, it will underperform. Any strategy is going to underperform. You will struggle. And the remaining 6 months, moderate wins, moderate losses. And here's the catch. You can't predict which months will be which. That's why consistency is everything. You have to show up every single day, follow your system, and let the probabilities to play out. But before committing to any strategy, backtest it. Make sure that it actually works. Once you do that, stick with that at least for 1 full year. That's how you're going to win on the long run. Rule number 6. Your environment determines your success. Do you want to survive all of the ups and downs of trading? Do you want to stay committed when things get tough? Surround yourself with the right people. This is literally the hands down one of the biggest secrets to trading success. No matter what strategy you trade, find a community of traders using the same method. And most importantly, find a mentor. Trying to figure out everything on your own is like walking from the East Coast to the West Coast on your foot. Maybe you will make it, maybe you will get lost around the way, but either way, it will take you a lifetime. Having a mentor is like taking a plane. You'll get thousand times faster and your chances of success skyrockets. Of course, if you don't give up. So folks, what's your next step? I just gave you the full blueprint. A mechanical edge over the markets and 6 most important psychology rules to win this game. Now it's up to you. If you're ready to master OP investing methods, scale your trading to 6 or even 7 figures in the next 30 days without guessing your trades or staring at charts all day long, I can help you. What you have to do is just to click the link in the description of this video. It will take you to my IG page. Make sure to follow me because this is how I will be able to reply you. And then just direct message me with the word ready on Instagram. And I will give you more info of how I will be able to help you to scale your trading to 6 figures in the next 30 days. So folks, I will be waiting for you on the other side. See you.